This is ET Markets Cryptologue, brought to you by CoinSwitch Kuber.
Hi, I'm Sidhartha Shukla, and welcome to the Cryptologue with ET Markets. Here, in every edition, we are going to discuss the most relevant issues in the crypto ecosystem. For this edition, we are looking into the state of crypto regulations in India. In India, regulations around crypto assets are still in a limbo. The first step towards regulating this space was taken in 2017 when an interministerial committee was set up to study virtual currencies and suggest regulations. After deliberating for nearly 2 years, in 2019, the committee, under the supervision of then Revenue Secretary Subhash Chandra Garg, released draft recommendations on regulating cryptocurrencies in India. This draft was met with huge backlash, as during the entire process, the committee had not even invited inputs from the various stakeholders in the crypto industry, nor floated a public consultation paper for suggestions. What really scared the entire industry was the recommendation of criminalizing any use or mining of any crypto token which was not issued by the RBI. It has been recently speculated that this draft might end up becoming the final bill with some revisions. Since 2019, a lot has changed and the global crypto industry has evolved by leaps and bounds. With the rise of NFTs, DeFi, regulators around the world are trying to play catch up with this disruptive technology. However, India is yet to take its first steps towards regulating this industry. To better understand how regulators can govern this emerging space in a manner where the survival of the industry and interests of the investors are balanced and safeguarded, we are joined by Rameesh Kailasam, CEO of IndiaTech.org, an industry association representing India's technology startups, unicorns, and investors to build positive business and conducive policy and regulations. Hello, Rameesh, and thank you for joining us today. My first question to you is, you wrote a white paper on the market opportunity for crypto assets in India. What were your observations and how do we stand to gain from this emerging technology?
If you look at crypto, the thing about it is that India, and from a regulatory standpoint, people were looking at it more like a virtual currency. But if you look at where things stand today, I mean, there are multiple uses that arise from the underlying technologies that crypto offers. And of course, the fact that it is built on the blockchain scheme of things. So fundamentally, this is what I would call as the 2.0 moment for India, if you look at it from an opportunity standpoint. Primarily, if you look at the first 1.0, it was the IT and ITES boom that we saw in the early 2000s. But subsequent to that, have we built capabilities around technology? Have we built capabilities around opportunities from emerging tech? Yes, we have. You have seen the startup boom. That because you're seeing a combination of technologies being deployed to create more ease for the consumer at large, with the startups, right from a cab hailing tech to a travel tech to an edu tech to a delivery tech, whatever names you may call it. The crypto and the blockchain scheme of things can become the next largest livelihood creator for India. And I draw this conclusion from two different points of view. One is, of course, the point of view that as you dabble in more and more emerging tech, you actually build capacity within the country to actually kind of build and harness that manpower that can service the world. So, I mean, no two words about it to call it as are you going to be the next back office for crypto? Well, I mean, that's not necessarily the term that we can use. We can always say that the next developers or project managers or crypto specialists or blockchain specialists should ideally be coming from the geography which leverages it the most. And we are in that unique position because we had the tech foundation already laid, and it's an add-on that people are getting into it. The second important aspect of the underlying technologies around blockchain and crypto is the fact that you also need people who understand it in detail, which means you need lawyers, you need accountants, you need people who can draw up contracts, you need journalists who can interpret it and explain it to the world. there is a huge kind of similar slice of what exists in today's world, but people who are knowledgeable about this topic, writing about it, explaining it, drawing contracts out of it, legal ramifications and explanations around the same, all of that also create a parallel kind of an approach for livelihoods in this space. Now, when I use the term livelihoods, it's also capabilities, and it is also the expertise that we as a nation can harness and develop and probably service the world, because the world is also in various stages of evolution in this scheme of things. And therefore, you can proudly call yourself maybe tomorrow that anything on crypto, you want to get contracts done, you want to get some legal opinion, India is the place to be, because there are a smart bunch of guys who are coming from there who are completely well versed in this.
All right. So to summarize, 2 points that came from your thoughts were the entire emerging sector can create a lot of employment opportunities across all the fields which are associated with it. And also, we have a choice right now whether we end up being the back office for this new asset class, this new technology, or we would be the front runners when it comes to creating products on top of it, right?
And we can do both as well.
Exactly. Right. This brings me to my second question. India Tech, your organization, had also sent policy recommendations to the government of India on how to regulate crypto in India. Did you get a response from them? And if you could share that with us, that'll be great. Also, could you shed some light on what were some of your recommendations in that policy paper?
So what we did was, one of the things that we noticed, and the motivation for writing this paper was primarily driven by the fact that while the whole industry was demanding that India should look at crypto, and which is a valid demand as an industry, I think the fundamental point that was missing was the fact that the client on the other side, which is the government, also needed some bit of handholding on what this technology kind of consists of. And plus, of course, the fact that you also had a regulator in RBI who was equally concerned as the gatekeeper that these underlying technologies had two primary kind of potential threats that they were putting forth. One was the fact that you were threatening legal tender in a way. I mean, not the industry, I meant the whole concept as such was in direct conflict with a legal tender to say, hey, I have rupee running, I know about other currencies which are backed by other sovereign countries, but I don't know what this is. And the second fact was the issue that people were buying, people were investing, and there was no clarity on who can buy how much of foreign exchange you can use, where do you hold it, are you allowed to hold, and a range of other kind of FMI and AML and all those kind of issues that came forth. And therefore, the gatekeeper in this case, which is the Reserve Bank of India as a regulator, was validly quite legitimately concerned with the fact that there is no framework around this, and plus it behaves, and people tend to make it behave like a currency. So maybe it is not the time that India should be looking at it. And certainly the systems that we have put in place tend to get compromised in such a scenario. And therefore, RBI, in its own wisdom, had put forth the case to the government that ideally this should not be looked at as something encouraging for the country to adopt. The government on the other side also did not have possibly enough literature to either give comfort to RBI or counter this. And that was primarily because the industry representations to the government was not necessarily in the direction as to give comfort on various aspects. And one of the things that we discovered as part of this was there were different ministries who were getting affected under different laws. It was not just RBI. And therefore, it was important that we look at it differently. So one of the things that we came out and said was, as a country, are we in a position to say, okay, I'm okay with having a virtual private currency? Maybe no. I mean, a lot of people in the market may not support that, but they may think that, okay, I mean, why should we have another private currency? We don't know what it is. The second thing was that the world is still dabbling in it. You have the developed economies where people are picking up and growing rich. And when I say growing rich, today, if you see the amount of holdings, there are phenomenal amount of holdings. That's because in the 2-year ban period, when the bear market was there, a lot of countries did pick it up. There are governments who have picked it up. There are banks who have picked it up. There are large global corporations who have picked it up, which means that today they do disclose and And if you look at the analysis globally, the US, China, and a few other countries are actually holding crypto assets. But at the same time, did they consider them as currency? They did not. They did not accord it the status of a currency. So for us as India, we needed to look at it differently. And therefore, the concept of asset came into our mind because one of the fundamental insecurities that this term throws, cryptocurrency, is the fact that it is called a currency. So we said, because you are according it a currency status is why you fear. What if we did not as a country accord it a currency status and still could engage with it in a logical manner? The best way out was to call it an asset. The moment you call it an asset, more than 90% of the insecurities around currencies go away. But as a country, we are used to regulating assets and we know how to handle them. The only difference in this case was that this asset actually transgresses the boundaries of India without the customs frontier hitting it, because it comes virtually. And therefore, one of the cases was that we said, let us, to start with, call it as an asset. The second thing we said was, for better controls, considering the fact that we are not fully in charge of what this behaves like, looks like, because there are multiple use cases we may not know that people may use for. So, and these relate to all the misuse part of it. So we said that call it as a crypto asset and introduce a system where you can register local homegrown crypto exchanges. We do have 4 or 5 large Indian founded crypto exchanges running. And therefore our take was, and not to be sounding protectionist here, we said that the intent is that, okay, you want to have better control, have organizations which will be monitoring it. Therefore, exchanges could be those which are set up in India, controlled in India, run by Indians. That could be a start. The next thing we said was put in sufficient checks and balances, because the moment you call it an asset, now the meanings become synonymous with a gold, with a stock, for different purposes. I'm not saying that it's a one size fits all. In certain cases, I might borrow some ways in which I might control gold. In some cases, I might borrow some things the way I might tax stocks or investments. And therefore, once that is put in place, then obviously you have the taxation angle which comes in. So people who would hold this particular asset, depending on the nature of their transaction. So suppose if you are a trader, then it is profits and gains from business or profession. That's the line item you go in your income tax. If you are somebody like you and me who is not necessarily a trader, but we are holding it like a asset or a commodity, then treat us like a capital gain, possibly short-term and long-term, depending on the nature of holding. And of course, if you are a corporate holding it, then obviously adequate disclosure norms should come in from Ministry of Corporate Affairs, where they say that, okay, since you hold this investment, but we have not named it, and Ministry of Corporate Affairs did come with a clarification on 31st March, saying for last financial year, since you hold it and there was no ban in place, you should disclose it. That disclosure has to be further defined, because for stocks, you have valuation standards where the accounting standards and the accounting bodies, whether it's the cost accountants or the chartered accountants, do come out with their standards for India, where they say that this is the way you should value it. If it was valued on 31st March so much, and being a volatile asset, it can be that by the time you file your return, the valuation could have changed. So how do you account for this? How do you kind of take care of it on the board meeting day? Those are all defined for assets of stocks, but not necessarily for crypto. So there could be valuation standards, there could be disclosure norms, under which item it should come. Should it sit under a current asset in the balance sheet? Should it be cash and cash equivalents? It cannot be called currency because it is not a cash, because we have not accorded it the status. Things like those need to be defined and fleshed out. Apart from that, of course, the fundamental issue which RBI further had, you had one, I've taken that insecurity off by calling it an asset. But the other part which RBI is still concerned and should be is the fact that these are virtually moving. So what if I'm keeping my stash somewhere abroad? It could be in a wallet, it could be in a software, it could be even trading in a foreign exchange, or it could be my relative sitting abroad who is buying and piling it up and passing it on to me, and I'm selling it in the local exchanges. KYC could have been done. So we have given a list of recommendations. This 5 recommendations actually boiled down to 15 more. It goes to the granularity of how the KYC should be done, what are the parameters. We have even benchmarked SEBI, RBI, and FATF and other guidelines on KYC norms. The travel rule, as FATF points out, on how does this crypto travel and where do you track the origin, who has to disclose it. If the stock exchange notices suspicious transactions, who do they report to? Currently, there is no formal reporting mechanism. So they do not know, even if they figure out something suspicious is happening where people are moving money or dumping or changing, they do not know whom to go and report this to in what form. So the financial investigation unit in Ministry of Finance does do that for other things, but I mean, it has not been defined and edged out yet. So there are a range of things. And of course, there are certain things which you do better. There are certain things I might do better. So it is not that the government should be micromanaging. So we also balanced it with a set of self-regulations. Now, self-regulations for us is like, for a common man's understanding, it should be something like, I'm allowed to drive at 50 or 40 on the road, but once inside my gated society, I'm supposed to drive at 10 or 20, which means your RWA has your own set of self-regulation put in place, which is far stringent than what the government has put in place outside on the road.
Join 8 million Indians and start investing on India's simplest cryptocurrency app, CoinSwitch Kuber. Download now.
Ramesh, the first interministerial committee to regulate virtual currencies was set up in 2017. And since then, we have seen that RBI has taken charge to regulate cryptocurrencies in India. I'm not using the word asset for a reason. But unlike other jurisdictions where the markets regulator seem to be more active in regulating this emerging technology, SEBI has sort of been like, on the sidelines. Do you feel that SEBI should get more involved?
Ideally, SEBI is a stakeholder, no doubt, but I think this is a wonderful question. Why is SEBI not taking the lead? Is because SEBI, in this case, comes second as per the way we are governed. Because since this is an instrument which has not been accorded the status and RBI has taken the lead, primarily because there is involvement of foreign exchange, there is involvement of anti-money laundering and a range of other issues. Therefore, SEBI would play second fiddle, wait for RBI to come out with the clarity, and then possibly they may step in. But if you look at the journey as such, it has been RBI which has taken the lead since 2013 onwards, when the first circular came in. Then 2017, they came out with the next one. Then 2018, where they've been warning customers to be putting adequate safeguards before they invest in things like these. And therefore, if you look at it, it has largely been an RBI-driven initiative purely from a motivation that this is an investment, this is a money, this is a legal tender. And therefore, SEBI's role comes in much later. It was also a kind of, if you look at the motivation of RBI, has been primarily saying this can be a parallel economy, this can be a parallel cash, this can be leading to money laundering, frauds, terror financing, and so on. So therefore, since that was the primary driver and motivation, obviously it fell in RBI's lap. And till RBI and government comes to that clarity on what is the status they will accord for it, SEBI ideally cannot step in at this juncture.
So basically you're saying because the RBI and the government in general has looked at crypto only as currencies, whereas over the years we have seen that it has evolved into an entirely new asset class and not every crypto token wants to be a new money product. Is the reason why RBI is at the forefront and SEBI is waiting for its turn? Because until and unless it's defined as an asset class, they won't have much of a say in this entire thing. So the Subhash Garg committee draft had recommended criminal action against any crypto token which was not issued by the RBI, which also included the likes of Bitcoin or Ethereum, which are public tokens on a public blockchain. Even these tokens were defined as a private token in the draft recommendations. And the recommendation had laid a lot of stress on the standalone development and regulation of distributed ledger technology. So what could India miss out if we criminalize any innovation on products which require a native token to work?
If you look at the Garg committee at that point of time, the narrative was still on the currency basis. And therefore, whatever is there in that committee recommendation is possibly the government's thought process and the regulators' thought process and the insecurities, as I said, which emanated from the fact that you are looking at it as a currency of sort, which was in direct conflict with your legal tender. And therefore, since the control aspect of it did not exist, even if possibly there was a control aspect, they might have taken a half look at it. But the fact that since that did not exist, it was looking at more saying that if you hold something which I don't accord legal status, then therefore there is a criminality of things that get evolved into it. And therefore, I would say that the entire committee report would lean on to those aspects primarily because the underlying assumption was that I'm looking at another competing currency. The second part is that when you look at the whole thought process that evolved since then and what we have brought to the table in the last 6 months, if you look at it, primarily it is important. And we are saying that it should be the country's decision, ideally to allow something or not to allow, because you run an economy, you run a legal tender and so on. If you take that motivation away that, okay, I will not accord it legal status, but give it the status of an asset, even then there are certain concerns which do still exist. For example, there is also barter which is possible. And barter can be done for a range of things. You can have tokens being used for different purposes. Now, tokens have different use cases. We have covered that also in our report. Probably look at how the US has this Howey test where they can determine what that is for. The taxability changes, by the way. So I think one of the underlying things that is also important, and I think when this report came in versus where we are today, the world of the blockchain and cryptocurrency has also fairly evolved to give much more clarity on what are the use cases for now and how things behave when they are put to different users. So fundamental differentiator is obviously a cryptocurrency and a token needs to be distinguished clearly. And within tokens, there are multiple use cases that even decide the nature and character of the token. And therefore, based on that, even our recommendations would vary for tokens differently. Depending on the use case, that's why we have said that depending on the use case, you can even look at whether a token should be an asset, should be a stock, should be the way it should be taxed, the way it should be accounted, all of that, whether it is having a shorter shelf life, a longer shelf life, whether it is for a thing like an art, whether it is for a thing like a contract and so on. So I think there are multiple use cases. Fairly, if you ask me, many in the government are also dabbling on this. They're looking into it from a different perspective, from a cyber perspective and so on. And this distinction is fundamentally important. But one of the things that we have also put across, since you mentioned this, is important. Another concern that the government had, even in the GERG committee report and even continues to have, is the fact of traceability and tracking in case there are misuse cases. And therefore, and since this is on a model where you can't say everything is closed and so on, and there is privacy, we have said that maybe initially we should also look at saying, okay, global cryptocurrencies which should be allowed for trade in India in these stock exchange, in these crypto exchanges that we are telling them to allow, should be those kind of stuff that actually gives you that traceability and audit trail to some extent. For example, there are enough now use cases emerging from the West and US and other countries where they are looking at and being able to trace on the fact for like recently you had the Colonial Pipeline issue where the investigators were able to trace back. And therefore, maybe if you say I'm too much of a closed currency, we may not allow as a nation. Probably it's not the right time for us to look at it. But maybe an open ledger technology, a Bitcoin equivalent or a Bitcoin could be looked at because there is a fair bit of traceability option available. I'm not saying that you're zeroing in on it, but there should be some comfort available to the government or for the regulators or for people who are on the investigation side of it, assuming there are misuse cases emanating. And tomorrow we shouldn't say that, sorry, it was a black hole, we don't know what happened, right?
Also, we have seen that while filing the draft recommendations, the various stakeholders in the crypto ecosystem were not involved over there. So would you say that that's the best way to go about forming policy or regulation around a new disruptive technology like crypto? Or what would you say would be the best practices that the regulator should adopt as well when it comes to regulating this space?
So ideally, the best way out in a disruptive technology scenario, and this applies to everybody, not just crypto, includes for startups as well, and also includes for a range of other emerging technologies, is that there are no doubt concerns which the government has, and there are ways in which those concerns can be addressed. But there is also a middle ground that both the industry and the government have to reach for the handshake to happen. The industry can put forth a lot of ways in which they can actually explain how their systems work. The government can therefore then ask the pertinent questions to say, okay, but this is of concern to me because you don't seem to do this. And then it is for the industry to put forth and say, but however, I can address this concern of yours this way. So I think somewhere the government needs to be clear on first putting forth its ideas, saying, these are my 10 list of concerns. We seem to have answered 5 of them, probably from maybe various industry representations, including ours. We seem to be borrowing a couple more from the other jurisdictions and FATF guidances which have come in this regard. But there are these 3 things which we as a country fundamentally find sacrosanct, and we need answers for this, for which the industry should sit across the table and offer those comfort factors. And that is how the middle ground can be reached. And in this case, I'm very clear that you have to answer all the questions. You can't leave any doors open from a concerned standpoint for the government as well, because as I said, the misuse case equally exists as any other kind of a trading commodity. I mean, today, if you look at it, people do smuggle cash, people do smuggle gold. Not that, I mean, they are illegitimate assets, they are legit. But at the same time, there is a market which thrives because of certain loopholes or certain things that people want to make use of or misuse of. So therefore, those are the things that needs to be addressed, no doubt, because you have people's investments at stake. But the fundamental underlying point is, as Indians, when the world is throwing up an new asset class, and we might be holding gold, we might be holding platinum, or we might be holding even metals which we don't find in our country. But we are holding on to them because we are importing them from other places. There is a similar asset class which has evolved in the case of crypto assets, and therefore, which has a value, which has a perceived value which is given. Plus, the new generation of investors are looking at it more so than even what the earlier generation was giving value to. So probably a new generation may not give that much value to gold as much as the earlier generations would have given, but they might value a Bitcoin better, or a share of a stock of a new age economy company than an old age economy company. So the perceptions are changing. So therefore, are we giving that opening to that new generation of investors that, yes, we are for investor protection, but we also give you a safeguarded way in which you can own and grow your wealth. And while the world is growing its wealth on the same lines, I think we can't be looking at denying of all those factors, but within a regulated environment so that the safeguards are put in place.
Thank you, Rameesh, for helping us understand what would be the most conducive way for the government to regulate this industry.
That's all for now. Keep listening, ET Markets Cryptologue, brought to you by CoinSwitch Kuber.
Join 8 million Indians and start investing on India's simplest cryptocurrency app, CoinSwitch Kuber. Download now.